Hi guys, welcome to the channel. In this video, I would like to share some results, interesting findings, and a perspective following an intraday analysis of the breakout setup. Here's how the presentation is structured and the open questions covered later. First, we'll look into a bit of background and what data was used during the study. Then, where did the intraday study start and what structural elements were identified? Next, we'll have a closer look to see in which of the 30-minute timeframes are breakouts more likely to happen, how much volume is present in the breakout area, and is the volume giving any clues that a breakout is about to happen? What is the level of correlation with SPY and IWM? What data suggests about character and skills needed for the breakout setup? And the last one, where can I get edge when trading breakouts? When talking about data, it was collected during a deep dive, which was made on stocks and ADRs above $3 with daily volume more than 100K. No biotech was included, no ETFs, and a timeline of 6 years. A total of 2,578 tickers were reviewed and 963 breakouts were identified. More on this study and the deep dive is available on the video you see now on the screen on this YouTube channel. During that deep dive, the full list of breakouts were classified based on pattern, and a closer look at the pattern analysis was made. This time, all those 963 breakouts were arranged in a chronological order. To the initial layer of data, which was collected during the first deep dive, 2 extra layers of information were added. A side-by-side comparison with SPY and IWM on the daily chart to better understand what the overall market was doing while the breakout was happening, and an intraday 30 minutes chart to be able to have a closer look at the price action and volume during the consolidation period, but also during the breakout of the particular stock. Let me give a bit of details on how to read this chart so that you can easier track it and read it later in the presentation. What you'll see on the top left is ticker and the 30 minutes time frame. The same information is displayed in the center of the chart. Then there is one blue line which is located at an important resistance level in the breakout area. The line has a number at the left, which is the price in USD at that particular level. And then you see another line on top. It's more to understand what is the price action between these two levels. What you'll see also is green arrow pointing at the 30 minutes candle. This is the moment that is considered the time frame when the breakout started to happen. And at the bottom of the green arrow, there's an hour and the exact date of that particular start of the breakout. You'll hear me a lot talking about 963 breakouts happening across all this presentation, and to manage your expectation, but also to have in mind these 963 breakouts are not happening within 1 year. This is the data collected for a 6 years period. And what you'll see on the screen is a chart highlighting the number of breakouts per year. And because 2020 and 2021 were that crazy, what I consider as a more standard year and normal, usual year is to have around 114 breakouts. I will refer later in the presentation when I will present some percentages to a standard year. Have in mind that it's referring to a total of 114 breakouts per year. Now that we have the background on data sorted, here's the next question. Where did the study started and what structural elements were identified during the intraday chart analysis? This is possibly the most important part of the presentation because these findings change so much the way I understand and read the setup now. Here's where the study started. What I was surprised to see during the first deep dive was when studying the pattern of the setup, I saw that the up flat flag and the channel have something in common, and they happen very, very often. So in 89% of the cases, the setup itself has this top particular line, which creates a resistance, doesn't allow the stock to move upwards and forces it to go into a period of consolidation. And then as soon as that resistance is exhausted, breakout actually happens. I was highlighting in the previous video, find the level of resistance on the daily chart and the intraday chart, because it seemed to me at that time also very important. During the intraday chart analysis, one of the main goals was to try to understand the price action and volume and the dynamics that creates with time this line of resistance. So this is what I looked into. I'll take a couple of examples so that you see what I mean. Here's the daily chart and the setup on the daily, and this is the intraday 30 minutes time frame. So I was trying to find that level of resistance, and to me here it is. And then right away you can see the 30-minute time frame when the breakout started to happen. Here's another example, the breakout on the daily. And then you see the line of resistance that is creating with time, and then the 30-minute candle where the breakout is happening. Also pay attention how tight the move sideways is, and then also the volume in this case at the breakout area. Let's go into another example. So here it is on the daily, and then a bit of a choppier sideways move, but still there is an important level of resistance, and to me is this one. And then you see how the stock makes some attempts in pre-market already, and then at the open a nice volume and a significant 30 minutes move upwards and the breakout happening. So this line became from a line that it's usually common for trading to highlight these support and resistance levels. This particular setup is a structural element of the setup, which is super, super important to highlight and find in the process of trading the setup, because it could highlight the moment when the breakout is starting to happen. Because this line happens at the front of the setup, and because it's such a confrontation between bulls and the bears, I thought that it has a specific mechanics, and I wanted to give it a name as well. So in the end, I call it now the front line. Even in this particular example, like now highlighting this front line, you can see also another element which I found almost always is a 30-minute time frame, and I was very lucky to consider the 30-minute time frame because this shows so well this particular moment of breakouts. Highly advised to read the chart and the setups in a 30-minute time frame for this particular setup. So then you can always see on the chart a 30-minute candle in which the breakout is actually happening. And this is also another interesting finding and another point that I was happy to see, because in a sense, finding this 30 minutes time frame is the goal itself in trading the setup. And because of this particular 30-minute time frame, it also can help define the entry strategy, the stop level, and so on. So I was looking later in all the 963 breakouts for the front line and for this particular 30-minute candle and highlight it with a green arrow. And I wanted to give it that 30-minute candle a name as well, so everybody gets a name. So because the breakout happens, it's the liftoff of the breakout. That particular 30-minute candle, I gave the name of a liftoff candle. Now there is a front line and the liftoff candle. The liftoff candle is the 30-minute time frame in which the stock crosses the front line and is perfect timing to enter the setup, and it contains, in a sense, the moment of lowest risk of entry in the setup. I'll get to it a bit later in the presentation. What I saw though, when trying to find this liftoff candle, was that in some situation, the liftoff candle happens more at the end of the day, in the afternoon of the trading day. In some situation, this candle happens more like midday, and in some situation is happening at the beginning of the day. There is a natural question that wants to be answered, is in which of the 30 minutes time frames are breakouts more likely to happen? Well, if we look at the trading day within 30-minute time frames, then what we have is a total of 13 30-minute candles within the trading hours, and then One more candle was added to signify the after hours. And what I did for all these 963 breakouts was to go and count the exact lift-off candle when the breakout started happening. And here are the results. A very big amount of breakouts happening within the first half an hour of the day, 54.3% more exactly, and then 14.4% in the second half an hour. And then later in the day, less and less breakouts, with almost no breakouts in the afternoon. If we take these percentages and apply them to a standard year, which contains 114 breakouts, then we get a total of 15 breakouts happening in the second half of the day. So almost not worth it staying in the second half of the day for that setup. And then so much focus has to be allocated to the first part of the day. I was very happy to do this exercise because it confirms so much of the trading strategy and where the entry should be and where the focus should be. It also confirms how well Christian nailed the setup and totally legit and how correctly he's trading it. So here are a couple of conclusions. 69% of breakouts happen within the first hour of the trading day, 86% before 12 a.m. And then another type of conclusion that I made when looking through all these charts was there is time. Even when reading the chart and the setup within the 30-minute time frame, I could spot the entry, the front line, where the stop loss should be. So no need to be particularly like running with the 1 minute or 5 minutes chart because it can create some extra FOMO. To secure an entry edge, there are at least 30 minutes available, no FOMO. Then the next question of the study was how much volume is present in the breakout area. The main goal of this part of the study was to see if the volume indicator is giving any clues or signs that a breakout is about to happen. And now knowing about the lift-off candle and the front line, I was paying way more attention to understand the volume behavior in that particular area, both for the daily chart, but also intraday. As a result, I had two sub-questions. Is there a high volume during the breakout day? The answer is broad and subjective, so yes or no. I still wanted to do it anyway to see where the data was pointing, so I was looking at the daily chart for this question in this highlighted area and comparing the volume bars of the breakout day compared to what happened before. In this case, it will be considered yes, there is an unusual daily volume. Yes, there is an unusual daily volume. Here as well, we look at the volume. Yes, there is unusually volume on the day of the breakout. And here will be an example when, no, the breakout is happening. There is a breakout day, but based on volume, we could not see that we are going through the breakout day. So here is the question. And after looking at 963 breakouts, this is the results. In 67% of the cases, which is a good news, we have a higher volume than usual in the breakout day. That means this can be detectable with some scanners that we could possibly have the breakout day. And then no, in 33% of the cases, which is also a big amount of cases when the breakouts are kind of invisible, you cannot see based on volume that the breakout is happening. Pay more attention to this part of the data. So 33% of breakouts are not detectable when scanning for the increase in relative volume. For these breakouts, the price action remains the only indicator that could highlight that a breakout is about to happen. Breakouts require price alerts. Then I looked at the intraday chart. So is there a high volume in the lift-off candle? Here are a couple of examples. So in this case, yes, there is an unusually high volume during the breakout. Yes, in this case as well. And here is an example when, no, there is not so much unusual volume. I couldn't spot based on the volume that something unusual is about to happen. On the candle itself, the price action was major, but on the volume, it's almost invisible. So here's another example with that type of regular standard volume and the breakout happening. Is there high volume in the lift-off candle after reviewing 963 breakouts? Yes, in 52% of the cases, and no in 48% of the cases. again trying to point on the invisible one. So 48% of breakouts will not be detectable with the volume indicator in the lift-off candle. That was unexpected to see and to find so many of them which do not have this volume force behind. And it's a kind of perception about the breakout that to have this lift off and move upwards, you need a big volume to also go through that line of resistance. But it's actually not that true. You don't need that much volume. Once the sellers are exhausted, even a small amount of volume will create that price action and initiate the breakout. And that will bring me again to this point. Breakouts require a system of price alerts at the front line, meaning those lines where you get alerted when the price is crossing that particular line. This could help to avoid situations when you just miss the breakout during the trading days. Then the review of the intraday data in the breakout period show in some situation the presence of random high volume candles. Most likely big institutions are building position. Here's what I mean. This is an example when volume is having a regular good repetition day by day, but you also have these situations when you see unusually high candles during the breakout period, not exactly during the lift-off candle, but before or after the breakout happened. Here is another situation when those unusually high 30-minute volume bars are present a lot of times at the end of the day. Then here is another one, the bars after the breakout happened. Here is another example with a significant volume and more of those high volume bars after the breakout. I try to give them a name. There is something to study here. I call them the volume towers, and overall it's most likely big institutions are building a position, which is good to see. And I took them as good signs when I was seeing in the breakouts area, this kind of unusually high volume elements at the end of the day or like during the breakout phase. It's a sign and it's a good indicator that most likely a breakout is about to happen. A small wrap up on the information we discussed so far. So we talked about the front line, the 30-minute lift-off candle, and the volume towers. I highly advise you to use your charting tools and confirm the structure elements of the setup. Give them cooler names, but I hope you found it useful and insightful. Here's the next question. What's the level of correlation with SPY and IWM after the breakout actually happened? There were three answers assigned for this question. The market is going upside, the market is in a sideways trend, or the market is in a downside trend. To answer this question, we will use this layer of data, a bit of details on how to read the chart. The green arrow highlights the breakout day, which is the same on SPY daily and IWM daily. The green arrow always points at the day when the breakout happened, and you see at the bottom the date where the green arrow is pointing. Here, the market is going in an upside trend, so I considered the breakout happening in an upside trend. Here, the breakout is happening, but the market within the first days of the breakout and closer to the breakout day, the more important are these days. So within the first days, it was a sideways move, even if the breakout is doing a sharp move upwards, same on IWM. So these situations was considered a sideways market. And then here's the breakout happening, but the market overall is going into a correction. This type of situation was considered a downside market. And here are the results. In 61.9% when breakouts happened, the market was in an upside trend. 29.8% of the cases, SPY was in a sideways action, and 8.3% it was in a downside. Similar data after reviewing and summarizing the data for IWM. One of the conclusions that was highlighted also while doing the breakout map and coming again through this data as well is that breakouts happen most of the time in sideways or upside market trends. To put this question in reverse form, if you trade in a downtrend market, the probability of a breakout to work is 8%. The data collected during the deep dive is available on the link in the description, so you'll find 963 breakout slides, and then for all these slides there is one more slide with the breakout SPY and IWM correlation and the 948 intraday 30-minute charts. In addition, I found super useful this exercise to add the front line and identify the lift-off candle. That's why there are 100 tickers which have no lines and arrows on the chart, so that you could do the exercise and internalize knowledge for yourself. All available on the link on the description. Next question, what data suggests about the character and skills needed for the breakout setup? A small disclaimer, everybody can trade this setup. It's nothing unusual or something you should be worried about, but I saw it suggested by the data and I said it will be fun to highlight. Here it is. First one, patience. Patience because the setup is going through a consolidation area, so you'll have to be patient and wait for it to approach the front line. So that's in one situation. And then sometimes patience, after the breakout happened, it doesn't go upwards that fast. So you really need to sit on hands and be patient and wait for the breakout to unfold. Next, data suggests you have to be grounded, decisive, sharp, and quick. Where I saw this is at the moment, the setup and the sticker is approaching the resistance line, the front line. Then you have 30 minutes to take a decision, enter the stock, and decide the amount of stock you have to buy and enter the stock. So you have to be quite sharp and decisive within the 30 minutes time frame. Here's another example where the stock was sideways, and then when it happened, it requires a very fast and decisive action from the trader. And the last one, a sense of don't give up. And that's the fun and painful part to watch it on the data, but harder when you suffer it while you trade it. What you see is the stock doing the breakout, going through the breakout, and then coming back below the front line, which in most of the cases, this is where the stop level is. And that means it will take me out of the trade, which can be frustrating, and then a couple of half-an-hour candles later it breaks out and never come back. So seeing this could be super frustrating. Another example, sideways consolidation, then an initiation of a breakout, then comes back, takes you out, waits 2 days, and then going upwards, and then doing another artifact sort of here. So a lot of like this idea of not giving up, and if the stock is trading around the front line, still sticking to it could be an interesting thing to do. And then a last example, I think it's the lift off candle, then coming back, taking you out, and then next day breaking out. What a frustration here. Looking into the last question of this presentation, where can I get edge when trading breakouts? Take this slide as a perspective from my side or an opinion. Here's how I will answer to this question. So Breakouts Qullamaggie Style edge is in recognizing the setup. The first leg, sideways consolidation, tight price action, 10 MA above 20, the front line, ADR, and so on. All these elements should be there. And I assume an unexperienced trader will not recognize and see these elements correctly. So big edge of the setup will be lost. So that's the first element. The second, and in a sense, the goal of the setup is to try to enter at the lift-off candle. This is by far the cool part of the challenge when trading the setup, is to enter in that 30-minute time frame when the stock is crossing the front line, and when the breakout confirmation is there, but also a stop at the low of the 30-minute candle makes so much sense. It's almost no risk in such a trade. Third element is the market context. Because the breakouts happen in a sideways or bullish market environment, reading the ETFs, the sector's momentum, all these elements that will suggest momentum in the market can give you big edge when trading the setup. And the last one that I will put it like general is trading character and skills, being patient, grounded, sharp when needed, decisive, and that sense of not giving up when you are taking out, sticking around to see if maybe the stock is still having that breakout action could be an idea. So this is summarized into this trading character and skills element. Another attempt I'll try to do is to give a Breakout Qullamaggie Style setup overview. It's still work in progress, but here's how I will define the setup in a bigger picture and stepping back. So we have the setup, and what we have is a 3 to 7 days formation of the first leg in most of the cases. The first leg has 12% momentum or higher. The setup encounters a level of resistance and goes into a consolidation area with 10 days above 20 and step by step approaching that resistance level, or how I call it now, the front line, and goes through the breakout. In most of the cases, the sideways move happens between 7 to 12 days. The breakout happens in a upside bullish environment or sideways, and the breakout candle is in most of the time at the beginning of the day. Then the setup breakouts with 48% of the setups will not show an unusual volume in the lift-off candle, and 33% of breakouts will not show an unusual volume on the breakout day. However, the rest will have a significantly higher volume than usual. The breakouts is happening, and in 76% of the cases, breakouts will do at least 16% move upwards. And if you will continue and follow the breakout with a stop below 10-day moving average, it generates less than 16% of profit in 60% of the breakout situations. Don't take this element as an advice, but that's something that was measured in the previous deep dive. Yes, closer and closer to better understand the breakout setup and what a beautiful, interesting structural setup of the market. Thanks to Christian as well to sharing the setup with everyone. Here's what I'll try to do next. There is a gap in the data I have so far. So how many setups fail to break out, and how are the breakouts that fail? For now, there is the data that was collected for that 6 years period, and for each year, I know how many happened, but I don't know how many failed to break out, and that's something I'll try to look into. So that will be the next question coming soon. So make sure to subscribe and like the video if you liked it so far. So it will be about the breakout setup, failure rate analysis, what can be learned from failures. Please give it a like if you like the video, subscribe to the channel, follow and say hi to me on Twitter. And thanks a million for watching. Best of luck. Peace.